Hey, Michael, this is your Q1 2025 financial statement review. I've exported the P&L to Google Sheets for ease of manipulating. We can also put in comments and move things around in here. I find using a spreadsheet versus looking at things directly in QuickBooks to be a little more straightforward. So a few things to note before I get started. These first three columns are January through March of 2025, and then column E is the Q1 summary. So those first totals for those first three columns. And then column G is going to be your 2024 financials for Q1. So that gives us a way of comparing last year's results versus this year. I've also included a percentage of income column for each year. And so this is dividing each line by the total income for each year. This gives you a way to compare changes in different accounts versus the overall income and can allow you to find trends from one year to the next. So with that, I'll get started. The first thing I noted was that sales are up in 2025 over $100,000, which is great news. And then, so you have a total of Q1 sales of $183,000 versus Q1 2024 of $82,000. For contract labor, you have a total in 2025 of $96,000 versus $29,000 in 2024. This represents 52% of your total sales, total income for 2025 versus 36% of your total income in 2024. So you have an increase of 16% year over year of your contract labor. Another large contributor to your expenses this year is your supplies and materials. So it looks like the costs of materials in your jobs this year was 8% higher versus last year so far in Q1. This results in a total cost of goods sold. So the expenses related to getting jobs done, the direct costs, you might say, for your jobs of $155,000 versus 183,000 in sales. Then 84.6% cost of goods sold for 2025 versus a 61.5% cost of goods sold in 2024. Given that these two accounts are accounting for so much of your overall costs, a next step in financial statement analysis here might be to directly look into these accounts and see what are the major contributing factors. Can we identify the 80% of expenses in each of these accounts that are contributing to those higher expenses? In your case, since you're so directly involved in the business, you might know this off the top of your head already. These are the places that I would suggest looking into and evaluating for yourself. If you're not sure, one thing to look at and analyze is this an ongoing trend this year over last year, or is Q1 an exception versus other times in the business? Maybe you had certain jobs or certain things that occurred in Q1 that were one-off expenses that happened this period that are explainable versus something that's going to be ongoing, an ongoing trend. So your sales, your total income minus your cost of goods sold gives you your gross profit. In this case, your gross profit is 15% of your total income in 2025 versus 38.5% of your income in 2024. Dropping down to expenses, there aren't any particular standouts here in 2025. So expenses or overhead, these are the costs that it takes to run your business, irrespective of how many jobs that you have coming in. In this case, in 2025 for Q1, you had $16,000 in expenses versus $8,800 in expenses for 2024. That's about 9% of your overall revenue for 2025 versus 10.8% in 2024. So your overhead, you have improved your performance there, your efficiency in running your business year over year. I think this is a great measure here to keep an eye on. Overall, your net operating income, so that's your Total income minus cost of goods sold minus your total expenses equals $11,800 for 2025 versus 22,882 for 2024. Again, comparing those, you've got a 6.5% operating income versus your sales versus 27.8% of income in 2024. Below that, you've got other income and other expenses. The only thing to note down here is your credit card rewards. This could also be a place where you could track things, different types of income that are not directly related to the operating of your business. If you had a savings account that you're earning interest from, or you're being charged interest, this is where we would track that in your other income, other expense categories. At the end of the day, you've got net income. So this is your final income. It's pretty much the same as your net operating income. In this case, just a little bit higher based on your credit card rewards. And so based on that, I'm going to end this video. This is take one of video financial statement analysis. So I would love to have your feedback as far as if this was helpful and what you would like to see done differently. This is for your P&L, and I'd also be happy to review your balance sheet in this way if you feel like that would be helpful.